Now speaking, Maria Riley, Vice President, Investor Relations. During its quarterly earnings call, CrowdStrike reported that certain statements made during the call were forward-looking and represented their outlook as of the date of the call. These included plans, objectives, growth and expected performance for the second quarter and fiscal year 2024, as well as assumptions for beyond that period. The company reminded investors of risks and uncertainties that could affect the financial results and reiterated that all financial measures disclosed on the call would be non-GAAP, with a reconciliation schedule available in their earnings press release and Form 8-K filing. Now speaking, George Kurtz, Co-founder, President, and Chief Executive Officer. Second, customers are rapidly consolidating their security stacks on the Falcon platform, yielding greater cost efficiencies and unlocking powerful capabilities. And third, cloud security remains top of mind for customers, and our comprehensive cloud security offering continues to drive rapid adoption and net new ARR growth. CrowdStrike's Q1 report indicates record non-GAAP profitability, record free cash flow, and GAAP profitability for the first time in company history. This was achieved through increased gross margin, cost discipline, and moderated headcount growth. Three megatrends that will benefit CrowdStrike are AI, consolidation, and cloud. AI is being used to lower costs, drive better customer outcomes, and yield higher margins. Consolidation is driving demand for modern cybersecurity technologies like Falcon, with over 50% more deals involving 8 or more modules compared to a year ago. Cloud security remains top of mind, with 95% year-over-year increase in cloud service exploitation and 288% increase in threat actors. CrowdStrike has partnerships with AWS and Pax8 to provide customers with cutting-edge XDR technology and cloud-native security capabilities. Customers can realize over 200% ROI with Falcon and are switching from Microsoft E3 to E5 due to added complexity, less coverage, and higher cost. Now speaking, Burt Podbere, Chief Financial Officer. CrowdStrike reported a strong first quarter with record high revenue, subscription gross margin, operating income, net income and free cash flow. The demand environment remained resilient despite increased scrutiny and longer than typical sales cycles for larger consolidation deals. Net new ARR in Q1 was $174.2 million, up 42% year-over-year. Subscription customers with 5 or more, 6 or more, and 7 or more modules now represent 62%, 40%, and 23% of subscription customers, respectively. Total revenue grew 42% over Q1 of last year to reach $692.6 million, while subscription revenue grew 42% to reach $651.2 million. Professional services revenue was $41.4 million, representing 48% year-over-year growth. International revenue grew 53% year-over-year. Total non-GAAP gross margin was 78%, and subscription gross margin crossed the 80% milestone for the first time. Total non-GAAP operating expenses were approximately $424.6 million, or 61% of revenue, versus $291.0 million last year, or 60% of revenue. Non-GAAP operating income grew 40% year-over-year to reach a record $115.9 million, and non-GAAP net income attributable to CrowdStrike in Q1 grew to a record $136.4 million, or 57 cents on a diluted per share basis. Cash, cash equivalents, and short-term investments increased to approximately $2.93 billion, while cash flow from operations grew 40% year-over-year to a record $300.9 million. Free cash flow grew 44% year-over-year to a record $227.4 million, or approximately 33% of revenue. For the second quarter of FY 2024, CrowdStrike expects total revenue to be in the range of $717.2 million to $727.4 million, reflecting a year-over-year growth rate of 34% to 36%. Non-GAAP income from operations is expected to be between $116.4 million and $123.8 million, and non-GAAP net income attributable to CrowdStrike to be in the range of $129.5 million to $137.0 million. For the full fiscal year 2024, they expect total revenue to be in the range of $3,000.5 million to $3,036.7 million, reflecting a growth rate of 34% to 35%. Non-GAAP income from operations is expected to be between $498.9 million and $526.2 million, and non-GAAP net income attributable to CrowdStrike to be between $562.8 million and $590.1 million. CrowdStrike reported a strong first quarter with record high revenue, subscription gross margin, operating income, net income and free cash flow. Demand remained resilient despite increased scrutiny and longer than typical sales cycles for larger consolidation deals. Net new ARR was $174.2 million, up 42% year-over-year, and subscription customers with 5 or more, 6 or more, and 7 or more modules now represent 62%, 40%, and 23% of subscription customers, respectively. Total revenue grew 42% over Q1 of last year to reach $692.6 million, while subscription revenue reached $651.2 million, and professional services revenue was $41.4 million, representing 48% year-over-year growth. International revenue grew 53% year-over-year. Total non-GAAP gross margin was 78%, and subscription gross margin crossed the 80% milestone for the first time. Total non-GAAP operating expenses were approximately $424.6 million, or 61% of revenue. Non-GAAP operating income grew 40% year-over-year to reach a record $115.9 million, and non-GAAP net income attributable to CrowdStrike in Q1 grew to a record $136.4 million, or 57 cents on a diluted per share basis. Cash, cash equivalents, and short-term investments increased to approximately $2.93 billion. While cash flow from operations grew 40% year-over-year to a record $300.9 million and free cash flow grew 44% year-over-year to a record $227.4 million, or approximately 33% of revenue. For Q2 FY24, they expect total revenue to be between $717.2 million and $727.4 million, with non-GAAP income from operations estimated between $116.4 million and $123.8 million. And non-GAAP net income attributable to CrowdStrike estimated between $129.5 million and $137.0 million. For the full fiscal year 2024, they expect total revenue to be between $3,000.5 million and $3,036.7 million, with non-GAAP income from operations between $498.9 million and $526.2 million. And non-GAAP net income attributable to CrowdStrike between $562.8 million and $590.1 million. Barclays analyst Saket Kalia inquired, "Hey Bert and George, congrats on the DoD authorization. Can we talk about what you're seeing in legacy endpoint share gains? Given the macro environment, how are you feeling about the opportunity for continued share gain in endpoint specifically?" George Kurtz replied, "I'm optimistic about our ability to take market share from legacy players in endpoint security. Our current leadership position of 17.8% in the fragmented market speaks to this. We have a strong presence in North America and continue to penetrate deeper into other geographies, converting legacy players. The numbers show that this conversion process will be ongoing for the foreseeable future, which bodes well for CrowdStrike's continued success." MoffettNathanson analyst Sterling Auty inquired, "Can you tell us about the impact of the banking crisis on ARR linearity and billings in Q1? Burt Podber replied, "The banking crisis had virtually no impact on our ARR. Churn from the banking industry was minimal and we closed numerous deals with regional banks this quarter. Banks need strong cyber defenses, and our gross retention remains high. Q4 usually has our largest deals, which impacts our billings and can lead to whipsaw effects. However, the focus is on ARR, which shows the overall health of the business." Truist Securities analyst Joel Fishbein inquired, "George, have you seen any new threats arise due to the increased use of AI models?" George Kurtz replied, "We have observed adversarial AI for some time, which allows adversaries to bypass security systems. Recently, generative AI and LLMs have made it easier for novice attackers to have capabilities on par with nation-states to create new vulnerabilities, deliver phishing emails, and more. We are excited about our recently announced Charlotte AI, which is a game-changer for our company as it significantly reduces the analyst's workloads and provides intelligence through the Falcon platform." Truist Securities analyst Joel Fishbein inquired, "Can you discuss how CrowdStrike Falcon Complete XDR will help you gain a competitive edge in the market?" George Kurtz replied, "When it comes to leveraging AI and XDR technology, our company provides a comprehensive service that allows customers to have peace of mind. We can automate processes quickly and efficiently via the use of AI-driven models, providing customers with faster response times and cost savings." Morgan Stanley analyst Hamza Fodderwala inquired, "George, how are you planning to monetize the new AI services you released? Do you think it will lead to more customers and sales? Are there specific products associated with this initiative?" George Kurtz replied, "Our platform is built on a foundation of data and algorithms. We are confident that this will lead to increased usage of our modules and platform. We will continue to iterate the platform, leveraging the 10 years of data we have at hand, to make sure our AI-driven security solutions are successful. We will then consider how to monetize it with an additional SKU offering." RBC Capital Markets analyst Matt Hedberg inquired, what do you see as the biggest drivers of second-half net new ARR acceleration, and what is your target for fiscal 24 ARR growth? Burt Podber replied, the great question you asked allows us to explore the second half of the year. We are confident in our prospects for this period due to three factors: pipeline, products, and partnerships. Our pipeline has been rapidly increasing since mid-Q1 and we anticipate it will continue to grow. We are excited about LogScale, Cloud, AI-powered XDR, and Charlotte as our product offerings, and have established partnerships with Dell, Pax8, and others that will help move the needle in the second half. Cybersecurity is still mission-critical and customers want to consolidate and reduce TCO, which Falcon is designed to do. This quarter alone we closed over 50% more deals involving 8 or more modules than a year ago, which speaks to the power of our platform. Our stated assumptions remain the same. Evercore IC analyst Andy Nowinski inquired, could you please provide an update on your partnership with Dell and whether it has had an impact on your revenue guidance for the year, as well as any traction in the SMB sector? Burt Podber replied, the Dell partnership is tracking according to plan, and in the quarter we saw a 7-figure deal with a regional healthcare company come as a result of that partnership. Although it takes time for new alliances to gain traction, we have high expectations that our numbers from Dell will continue to grow over time. Bank of America Merrill Lynch analyst Tal Liani inquired, can you provide an update on your entry into the SMB market with Falcon Go, and what kind of competition do you see from Microsoft? Also, what is the breakdown between sales to existing versus new customers, and where is the growth coming from? George Kurtz replied, Falcon Go has been a great success for us. We're targeting the SMB market with a specific focus and leader on that initiative. Additionally, we've seen success by partnering with MSPs like Pax8, which allows us to provide lower-cost offerings to our customers. The SMB market is highly fragmented, but customers are looking for outcomes. We've seen success with customers who are looking for next-generation solutions that don't rely on signatures. We'll continue to ramp up our channels with Dell and other managed service providers to drive growth. Burt Podber replied, Tal, in terms of the mix between our install base and net new logos, we haven't seen any material difference compared to last quarter. We still have plenty of headroom to grow from net new logo acquisition. This is something we discussed on earlier calls. We are pleased with the opportunity for both net new logos and cross-sell, upsell opportunities. Cohen & Company analyst Shaul Eyal inquired, George, could you discuss any specific trends this quarter surrounding the leading modules and identity versus Microsoft displacement? Thank you. George Kurtz replied, I've spoken with many customers at RSA and throughout the quarter. Consolidation has been a key theme, as customers have been drawn to our cost-compelling model for better security outcomes. We're seeing customers invest more in CrowdStrike, although larger deals tend to take additional time and scrutiny. This is reflected in our quarterly results and the growing pipeline of customers looking to do more with us. Guggenheim Partners analyst John DiFucci inquired, George, what changes have you seen in demand for your products in the SMB and mid-market this quarter compared to previous quarters? George Kurtz replied, no, our SMB segment saw strong demand and results. We have a great model with the right technology to solve customer outcomes. Falcon Go and Falcon Complete are both compelling propositions for customers, given the price point and world-leading security. We've seen good traction in the SMB market and it still has lots of potential. We didn't experience any slowdown last quarter. JP Morgan Chase & Company analyst Brian Essex inquired, what initiatives are you taking to maintain GAAP profitability while still driving growth? How have stock-based compensation changes impacted your plans? Burt Podber replied, thanks, Brian. Our approach has been focused and methodical. We've seen great progress on gross margin and non-GAAP profitability, which is now at 30%. GAAP profit is our goal and SBC management is key to achieving that while attracting and retaining the best talent. Dilution is expected to remain under 3%, demonstrating the power of the model and our disciplined growth. Everything we do is by design and we look forward to reaching sustainability. Wells Fargo securities analyst Jonathan Ho inquired, can you explain the success you have experienced with your additional add-on modules? Is it due to new products like Cloud or ESM, or are you seeing more multi-product sales from existing endpoint capabilities? George Kurtz replied, we have seen tremendous growth in many areas, particularly with LogScale. The demand for faster and cheaper logging solutions is high, and customers are actively seeking a solution. Additionally, identity is becoming more budgeted for, just as EDR was in the early days. Cloud is also showing great success. Our one SKU offering of both agent and agentless on the cloud has been well received by customers. We continue to add more capabilities to our product lineup, which I'm very excited about for this fiscal year. Mizuho Securities analyst Greg Moskowitz inquired, Burt, could you comment on the average duration this quarter and if there was any change? George, how do you plan to use AI and open source to develop your own LLM based on your dataset to provide additional value and potentially drive a greater wedge with competitors? Burt Podber replied, Hey, Greg. We anticipate a shift from multi-year to one-year deals in the long term. However, there was no material difference in deal duration this quarter compared to last quarter, and it remains within our expected parameters. George Kurtz replied, In response to your question about LLMs, our view is to leverage the existing technology that's out there. We may build our own, but what sets us apart is our dataset, which has been trained over 10 years and provides a sustainable advantage. Our ability to interchange LLMs within our dataset gives us the flexibility to get the best outcome for whatever we're looking for. Needham & Company analyst Alex Henderson inquired, Could you please provide an overview of your assumptions regarding pipeline, deal size, duration, closure rates and price in the current market conditions? Are there any additional conservative measures being taken into account? What can we expect in terms of deal size and closure rate? Burt Podber replied, Thanks, Alex. We saw a 50% increase in deals involving 8 or more modules this quarter compared to a year ago, indicating customers are looking to leverage our Falcon platform for consolidation and cost savings. Though the macro environment is not improving, we anticipate shorter deal durations but longer sizes as companies look to do bigger deals with more scrutiny. We maintain our previous assumptions on net new ARR. George can provide more information on the Fed side. George Kurtz replied, Yes, we are thrilled about IL5 and the potential it offers to expand our federal opportunities. We saw solid wins this quarter, which is a testament to our ability to get in and stay in the game. Although these deals take time to close, they are usually large and long-lasting, making them highly valuable. This certification will further open the door for us to pursue more deals in this area. Oppenheimer & Company analyst Ittai Kidron inquired, Burt, what impact do you expect AI to have on your long-term margin target? Burt Podber replied, We are pleased with our increasing margins, which are supported by data center optimization and cloud workloads. We have been investing in AI for 10 years and it has given us a significant lead over our competitors. Scotiabank analyst Patrick Colville inquired, Can you provide more clarity on the increased scrutiny and longer sales cycles in the quarter, especially late in the quarter? George Kurtz replied, We've seen customers become increasingly interested in consolidating their security solutions and reducing spending with competitors. This enables them to get a better outcome at a lower cost, which has been our focus since the beginning. We are seeing an increase in scrutiny as customers take longer to decide. This trend is consistent throughout the quarter. Cantor Fitzgerald analyst Jonathan Reichhaver inquired, What are the costs associated with log-scale adoption compared to other solutions for data retention, particularly for active threat hunting and large language models? George Kurtz replied, Log-scale has demonstrated a tremendous increase in our compression algorithms and storage capabilities. This technology gives us the ability to store data faster, better, and cheaper than ever before. We've seen customers utilizing log-scale as their data lake due to its cost efficiency and performance. The modern architecture behind log-scale really gives us an edge that is being validated by customer testing. Rosenblatt Securities analyst Catherine Trebenick inquired, Can you please update us on the progress of your coalition partnership and its impact on cyber insurance? George Kurtz replied, Cyber insurance is becoming increasingly difficult to obtain and it's more expensive than before. The acquisition of CrowdStrike has been a boon for our customers, as it reduces the overall risk associated with cyber threats, often resulting in lower premiums and cost savings for them. We also assist customers in obtaining cyber insurance when needed. George Kurtz replied, Thank you for your time and questions. We appreciate your interest and look forward to seeing you at the next quarter's earnings call.